Hi, mate. All right, happy day. Today is a Wednesday. I think it's the 26th of February, 2020. Today we'll cover gold, we'll cover oil, we'll cover Bitcoin, we'll cover Swissy pairs, dollar pairs, yen pairs, and of course, anything you want. So let's go. Ba-dum-ba-dum-bum-bum. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, and please never risk money you cannot afford to lose. Hi, my name is Wayne. It's very nice to meet you. I'm a currency trader. I've been trading currencies for a very, very long time. I love being a currency trader. I love the markets. I love trading stocks and the treasuries and energies and any kind of future, really. Hey, I like trading wheat if I can. But my absolutely favorite thing in the world is trading money. Money is liquid. It is liquidity. That's what I love about it. It's not like you buy an apartment building, which I love to do as well. The thing is, it's not necessarily liquid. It might take you a year to sell it, and maybe not at the price you wanted. Money is money is money is money. Liquid, liquid, liquid. I love telling people that I buy and sell money for a living. They're like, wow, really? I'm like, yeah. Second oldest profession in the world, right? Trading money. So, very cool. So, I am here to share my experience with you with the hopes that you become a better trader. I made a lot of mistakes in the beginning because I was self-taught. There was no books on Forex. Can you imagine that? My first trading account didn't even have charts. And then the few people in the money management business that I knew, I said, hey, I'm a Forex trader. They laughed in my face. And then I told them I used technical analysis, and they laughed in my face. So that's where I started. Like, no joke. They're like, oh my God, really? You trade Forex? Loser. So, the world's changed a lot since then. I've learned a few things around these decades that I've been doing this. Some of them I learned from my mistakes, and some are huge home runs that I carry with me today, some habits that I do every single day. So I'm here to teach you those, share with you as much as I possibly can. But at the end of the day, you have to do it yourself. So ask questions, get involved, take notes. And as I suggested yesterday, take notes by leaving comments in the videos below, because then later on you can go into your YouTube account and search your comments and say, when did Wayne do that relative strength exercise? And you can pull it up and say, oh, it was Tuesday, the 25th of February, 2020. You can pull it up and watch that video again. Maybe even timestamp it to see, right? That's what I think you should be doing. If these webinars are beneficial to you, if you like them, if you find them educational, if you find them entertaining, if they're just fun or funny or, like a clown, thank Traders Way for bringing these webinars into your life. Visit tradersway.com. Spend about 30 seconds opening a demo account, then download MT4, place some trades, check out the execution speed, check out the swaps, check out the spreads, and then one day, when you're ready to trade real money because you have confidence in your skills and your abilities, maybe you'll give them an opportunity to earn your loyalty and respect, and you will choose Traders Way as your trading partner, your execution partner. Okay? Good to see you all you all. Baby G says, I have a document with all the webinars I learned a lot from. Oh, so you just keep like a URL? That's a smart way of doing it, Baby G. Did anybody enjoy the relative strength exercise that I did yesterday? Bernard says, great content. Yeah, thank you. Mehdi says, I use the relative strength. It's great. Gives me a perspective. Yeah. Cool. Let me share a story with you. Last night, I was sitting outside. The sun was setting over the water. I had a roaring fire at my feet. And I was just sitting out in the dark. The sun's setting. And I have a cigar. And it was funny because I'm getting low on my supply of cigars. So I'm in my giant humidor. And I go through all my normal stash. I'm like, I don't have anything. And then I'm like, oh, well, what about this other area? And I got this big, Anyway, so I find a whole box of cigars I didn't even know it was there. They were just sitting there for, years, right? And it turns out they're Monte Cristo cigars, the best cigars that they make, but then they aged them an extra 5 years at Yeho, right? And they've been sitting in this box in my humidor for, I don't know how many years. But anyways, it's the best of the best of the best of the best of the best Monte Cristo cigar. And I'm like, oh, look at this. How awesome. So I'm out there, and it's beautiful, right? I'm really enjoying myself. Again, now the sun is actually set. The fire is roaring, and I've got my fabulous cigar. And it's like the perfect cigar in the world. It's crazy, ridiculously beautiful. And then I'm like, oh, I guess I should trade some Forex. So anyway, I pull out my cell phone, and I'm like, let's find a trade. So I open up Euro Yen. Boom, we're sitting at 1.20000000. So, what's my mistake? Tova wants to know more about the Asian fade. Why don't you join the swing trading group and then do the whole entire day trading course? I outlined it very, 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 very deep. Okay. Shopping for trouble. Yeah, well, when you shop hungry, you always find something to buy, right? So I'm a bear. I'm at a psych level. But not really planned. I can't even see pivot points on my phone. So luckily I have risk management, and I lost 33 pips this morning. I woke up, let me bring this up. I woke up and I was like minus 25 pips. My stop's at minus 33. And I'm like, oh, that sucks. Because by now I should be up 50 pips, right? And then like 10 minutes later, 15 or 20 minutes later, whatever, I look at my phone again, and the Euro Yen jumped like a bajillion pips. Oh, look at this. It even came back around. How interesting. So I avoided this pain here. Oh my God. Yeah. I just avoided this pain. So I shorted at 120. So I was right here. See, Asian session. That's where I shorted. And then it's funny, I just saw this, pa-chow, as I was showering. It looks like it's come all the way back down. Wow. Wow. So I could have I could have taken a slap in the face. It was only, this whole thing's only 50 pips. But still, I threw down a trade. Not too smart, right? Bad coach. Bad coach! So let's see what I was trying to do. Okay? Makes sense. Makes sense. So I was short here. But look at that, huh? Wow. So, no plan. I was feeling all good about myself. I don't remember thinking like, oh, I'm the world's greatest trader. I can, even sitting out here smoking my cigar, I find trades. That can happen, by the way. Yeah, smoking. Well, it was just, it wasn't But it's not what I like to do. So anyways, I had the right price. It's not dumb, right? You can see it's not a dumb trade. But I wasn't sitting at my computer. I didn't have it all, set up. I didn't know where the daily pivot was, all that kind of stuff. All I knew was I was a bear. It had faded up in Asia. I'm on the 120. It's a great psych level. It's not a bad trade. But it's not really, I wouldn't put it on a PowerPoint presentation and say, all right, set up a fire in the backyard, right? Luckily, I wasn't drinking wine or scotch or anything, so I was sober. But, I wouldn't have a PowerPoint say, this is how you do it. Sit in your backyard and then open up your cell phone and find yourself a trade, right? Which I did. And anyway, so I paid the penalty. So I lost 33 on this. Wah, wah, wah. But, so I'm just trying to tell you, I make mistakes too. I make a lot of mistakes. Okay, so anyways, it happens. John says maybe I'm an addict, either on the cigars or on the trading, maybe both, huh? I'm telling you though, I do smoke a lot of cigars, and that was a beautiful cigar. It was beautiful. Wow. Okay, so anyways, so I'm missing this volatility here. I think I'll let it play out. Anyways, so that's amazing in 2 hours. Okay. So when I break the rules, I generally pay the penalty. So I think I remember writing in my book that the only luck I have is bad luck. And that would be a great example of it where it's not a bad trade for technical reasons. I got roll reversals, I got pivot points, I got psych levels, I have trend. And my type of luck is we'll be at 119 in a day or two, and I sold at 120, and somehow I lost money. Son of a bitch, right? This pops up 50 and drops 50 in an hour? Like, what the heck was that? So anyways, that'll be the type of luck I get, and I only get that type of luck when I throw down a trade instead of execute a plan. And there is a big difference, right? Yeah, what happened to my cigar donation thing? I don't know. Yeah. I guess I feel awkward, but it's a nice way to share anyways. Yeah. Oh, I'm in New York in 3 weeks. I keep forgetting. I keep forgetting. I'm going to be in New York. Who wants to meet up for cocktails at the Harvard Club? It's exclusive. I don't know if they have a bar, a bouncer out front or not. I don't know they let. So I have to figure out the logistics. But would you like to meet up for cocktails at the bar at the Harvard Club of New York, and then maybe walk over I think it's 2 blocks to Bryant Park, hang a left, and we'll go to Nat Sherman's townhouse, and we'll have a cigar in the basement. We can get into their private vault and stuff like that. I kind of loosely knew the owner for a little bit there. So if you wanted, that's early second week of March, I think, or the 10th, I'm guessing. What's the dress code? It's one of the most exclusive clubs in the world. Not flip-flops and camouflage cargo pants. But suit and tie, no, but dress nice. Right? The way I think about it is when I walk into that room, I'll be the poorest, dumbest person in the building. So I'm going to have to make up for it by at least wearing a jacket, let's say, right? But smart. Let's call it smart. Smart. Dress smart. Okay. What was I going to do next? So anyways, if you guys want to meet up and just hang, that's cool. All right, let's move on to the next. I don't think you have to have a tie. I mean, there was a time I'm sure you absolutely had to. But a jacket, I think would be cool. Just dress like you own the place, right? Dress good, dress nice. All right, all right. Up, down, up, down, up, down, up, down. Okay. So we have to switch and see if it's more bullish than bearish. Would you agree it seems to be stepping up, not stepping down? Cool. Now that's risk on, which is really interesting. The yen pairs are all over the place, which is disconcerting. And then some of the Swiss pairs are showing risk off. So I asked the swing trading group last Thursday, and I guess we're meeting tomorrow, right? Right? The next meeting's tomorrow. Are these my glasses? Which glasses should I wear? I asked the group, I said, are you risk on or risk off? And I think most people, if I remember correctly, said risk off. So the question is, are they able to catch those trades? And that's what we're all working on. Some of these things like that yen pair going up is risk on. This euro dollar going up, that's risk on. You don't hear it in the media though, right? Are you logging in and every day, like I'm hearing it a lot, like, oh my God, the dollar's strong. I'm like, dollar's strong, euro dollar's up. What are you talking about? You got to be very careful when you watch the news, right? So I hear one thing and I look at the chart and I see something else. This is very bullish, so that's risk on. No, that ain't working. Okay, so you can see the up, 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 down, down, buy, up, 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 down, down, buy, up, 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 down, down, buy, up, 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 down, down, buy would be tomorrow's trade plan. On our way probably to $1.10. Right now it says $1.32.5. All right, fine. Yeah, Ed. Yeah. So yeah, Ed's like, if you don't have a time, I know there are times. Anyways, hang on. Let's see. This is the Harvard Club of New York. You have to be a member and you have to have graduated from Harvard. You can't become a member unless you've graduated. So like we're meeting here, guys. Well, this is the main room, but we're gonna just hang out in the bar to have a cocktail. And you know, it's nice. It's just a regular kind of bar, but you know, it's nice. There's libraries, and I mean, but it's nice. Like, look at that. So, do you a suit and tie? You could. Oh, for sure, right? Look at this library. Isn't that great? Remember, books were the most valuable thing in the world for a long time. Look at the roof deck, huh? Look at the roof deck. Nice. Where's the actual kind of bar? They have multiple restaurants, so there's the steakhouse. I'm trying to see. So I'm staying there too. So it's kind of, where's the bar? I guess they only had that one bar image. There's a lobby. So it's nice. Like, you certainly could wear a tie, right? They still don't even bring up the bar. This is the only one I've seen so far. So the bar is like nothing major. Is that even it? That's not even it. Harvard. That's not Harvard Club in New York. I don't know what it is. Anyways, there's something somewhere. They have a nice little. Oh. Oh, here's the dress code too. Anyway, so I don't know. It's nice. It's nice. Whatever. If you want to wear a tie, no one's going to laugh at you. If you don't want to wear a tie, at least wear a jacket. Just dress nice. Dress smart. Right? Oh, we can't smoke there. We'll have to go to the Nat Sherman's townhouse. Smart Ad says, hey, what makes investors happy? Is it when bonds yields go up or down? Well, you have to understand that if bond yields are falling, if the yields are falling, that's because people are buying them. So it depends what makes you happy. If you buy a bond because you're front running the Fed, you want prices to go up. So your happy yields are falling. Okay? Another way of looking at it is if you own a bond and hold it to maturity, you're going to get paid that percentage, plus you get your money back. So you're happy with a high rate. Okay? But I've asked you to do this 2 weeks ago, maybe 3 weeks ago. I said, watch the Fed funds rate, futures, right? Fed funds futures. And I said, based on the pricing in the Fed funds futures market, you can see the bank-to-bank pricing of bonds over time. Okay? And I said, from that, you can determine, based on their negotiations, what they believe the Fed will do in the future. Because if rates are coming down, they'll in June, and if they're coming down in September, and if they're coming down in January, then they're going to want to negotiate over that period of time interest rates going down. Or if it's a smaller contract, if it's only over the next 6 months, they might price in 2 rate cuts instead of 3. Okay? But either way, or they don't believe the Fed's going to cut and they price in none, but bank to bank, they're negotiating the future value of money today. Okay? So, if you thought the Fed was going to cut interest rates twice in 2020, how do they actually do it? Do they actually go into a room and they pull a lever and interest rates fall? No. Instead, they call up the bank, the Fed, the New York Fed, and there's a trading desk. There's actually a foreign exchange trading desk. They also have an open market operations desk. And the open market operation desk, the OMO desk at the New York Fed, it's the only one. Only the New York Fed has a desk like this, and because of that, the president of the New York Fed always has a vote on the FOMC. Others have to rotate. The New York Fed always gets to vote because of this OMO desk. What they do is if the FOMC, the Federal Open Market Committee, says cut interest rates, the desk says okay, and they start buying bonds. Okay? So, put all this together. How do you make money? I think that's what whoever asked, what makes investors happy. How about filthy, stinking rich, right? I've been a rich man, I've been a poor man, and I choose rich every frickin' time, right? In that case, that's what makes people happy, okay? Cool. Not that being rich solves your problems, but being poor sucks, okay? Cool. So, if you did your research and you said, well, Wayne told me to watch the Fed funds futures market, And based on my analysis, I believe, or the market believes, there are going to be 2 rate cuts in the next 12 months. Maybe 3. So you might say 2.5. But you're saying in the next 12 months, it's being priced in right now, 2 rate cuts in the next 12 months. Then you say, oh, well, that means when the FOMC makes those decisions, then they're going to tell the New York Fed OMO desk to start buying bonds. So I know right now, over the next 12 months, the Fed will buy bonds, will drive prices up, which lowers the interest rate because that's their intended goal. So I can front run the Fed today because I'm a genius. And the Fed is going to print money and make me rich. By the way, this is how the market works. This is what you've been supposed to have been doing for the last 12 years. So now you know, based on what banks are negotiating with other banks, they're pricing in Fed or interest rate cuts by the Fed, which then translates to you, the Fed entering the bond market and driving prices up and yields down. So you buy the 10-year T-note now. And when the Fed comes into the market, they'll push up prices and you'll make money. You're front running the Fed and the Fed makes you rich because that is what they're trying to do. Push money into the market. So how do they get money into the real economy? They make you rich. And what do you do with the money now that you just made free money by front running the Fed? By the way, they tell you weeks and months in advance that they're going to make you rich if you just enter the market. They'll do it. You remember when they said, no matter what, we're going to buy $300 billion in bonds this month, and next month we're going to buy $300 billion more, and the month after that, another $300 billion more? Do you guys remember that? Where does that money go? It goes to someone's bank account. And then you spend it. And by spending it, because you got all this free money, suddenly you're buying nice watches, fast cars, big houses, models, bottles, and everything else that goes with it. And now you're putting that money, because as you spend, it's someone else's income. And now they put that into their bank account. And then they spend it, which is someone else's income, which goes into their bank account. And they spend it. And it trickles all the way down. Okay? But that's what this means. So whoever asked the question, like, what makes investors happy? Well, it depends on, are you front running the Fed, or do you want to sit on a 2% 30-year bond? By the way, guys, about a year and a half ago, the 10-year T-note paid 3%. The 10-year paid 3%. Right now, the 30-year pays less than 2%. Holy smokes! Minister says, isn't Harvard under an investigation because there were cases where people paid to get in? It was not Harvard. No. There are many other schools. I don't know which ones, but Harvard's not one of them. Now, can you pay to get your way into Harvard? Frick, Harvard can do whatever they want. Harvard's a private school. They can take you for whatever reason they want. And they can exclude people for any reason they want. Now, they won't admit it, but everyone believes there's like an Asian quota, like there's too many smart Asians. So we can only have so many smart Asians at Harvard. They'll never admit it, but everybody knows it's probably true. Right? But they can take anyone they want for any reason they want, simply because they like them, because that's Harvard. Okay? Can you pay to get into Harvard? Yeah, why not? Hey, put $20 million in and build a new lab, in the chemistry department or at Harvard Medical School. Just build a new lab, 20 million. Sure, you send your kid. You build a lab, you build a $20 million lab, you can send your kids. There are some families, like the Weld family, they built the Weld, what do you call it? The Weld boathouse, where you do rowing on the Charles River, right? That's right across the street from, I think it's Elliott House. They built that, but then the Weld building is one of my favorite buildings at Harvard, in the old yard, right? So there's like and it's a freshman dorm. So it's in the old yard, Weld building. They have the road, but there have been Weld people going to Harvard for hundreds and hundreds of years continuously. But look, you build a dorm, you build a boathouse, sure, come on in, welcome to Harvard. Sure, why not? What's wrong with that? It's the American way. Let me show you. Images, google.com. Yeah, the Welds must have been pretty interesting. I should look into it and see their history, where they made their money. But to think of it, the Weld family going to Harvard for hundreds of years. Weld building Harvard yard. Yeah, this is cool. So I've been to the top of this building. This one's neat. So this is in the old yard. Oh, the other one's a better picture. Anyways, here's another great one. Nice, right? So freshman students live in this building. And I've been in this room up here, and they have a second one on this side. On the other side of this building, you have Widener Library. But anyways, so it's really, really cool, right? So they built this and gave it to Harvard. Guess what? If your dad built that, you get to go to Harvard. Harvard boathouse, Harvard. And check this out, really nice too. Yeah, and they built this. So yeah, you build this and give it to the school. Yeah, so this is, is that Elliott House? It's the one around. It's kind of, actually, so this right here, last summer I stayed in, what's it called? I have Kenwood stuck in my mouth. Anyways, I still stayed in a house right here, staring at this, like my room stared right at this. In Kirkland House. Sorry, I was in Kirkland House. And by the way, Kirkland House is the same house that Zuckerberg was in when he invented Harvard. They have these hallways. It was in a different hall, but it was like 3 doors down, like if you could connect to it. Where I stayed at Kirkland House was right next to the room where Facebook was invented, which was pretty funny. But anyway, so yeah. So the long story short, if you paid money, can you get into Harvard? Hell yeah. Hell yeah. Just build a building like that, you're in, dude. Okay? And you're like, I don't have any money. Front run the Fed! This is what I'm trying to tell you. All of this stuff makes sense. Okay? Okay? It makes sense, guys. You need to think beyond your 15-minute chart. What am I going to do now? Throw down a trade. Let's see if I can make 30 pips. There are institutions pumping free money into the economy, making billionaires, as they pick on in the debates, making billionaires richer. It's not that they're billionaires and they have access. They're smart. So when the Fed says we're going to, or the government, the US government says, we're going to throw down trillions of dollars of free money into the market, who do you think gets it? Okay? And there's no racial profiling who gets it and all that. It's a class thing. If you have a retirement account, you're saving for retirement. That money went to you. They drove up the stock market. If you own a house, that money went to you because you're an owner. They drove prices up from, 12 years ago. Houses had dropped and collapsed in price and it was the end of the world. And then people started gobbling up houses. A friend of mine bought 8 houses. He's like, oh, they're cheap. Boom, he bought 8 houses. Guess what? All those trillions of dollars that the government pumped into the economy pushed the asset prices up. The Fed, like if you remember Ben Bernanke, he actually said it. We're driving asset prices up. What does that mean? The value of businesses, the value of stocks, the value of bonds, the value of real estate, the value of everything, the value of money. We're driving up asset prices. So if you own, you get richer. If you don't save, you don't have a retirement account and all that kind of stuff, then you're not in the game. You're a consumer. Okay, great. But you're not an owner. And in the United States, if you're an owner, if you own businesses, if you own stocks, if you own bonds, if you own other types of assets, then you make money, and the money you make makes you more money, and the money that you made on your money makes more money. So the money you made on your money, or that made on the money that you made on your money, makes more money, while other people punch a time card and said, hey boss, I put in 4 hours, how much will you pay me? Oh, here's $22, thank you. Okay, so it's a class thing. What you need to do is, if you're in the get paid for the hour class, you need to find a way to get yourself out of that class. So this is the big lessons I'm trying to teach you here. When you do the work, now I only told you this 3 weeks ago. So you either choose to do it or you choose not to do it. You choose to be in the class that makes the money because that's how money is made, or you choose to watch videos on YouTube. Harsh, I know. Get in the game. Fed watch. I'll do it again. This is how you make money. The government is deciding right now, should they push up asset prices? There's a meeting in March, there's a meeting in June. In one of those meetings, they might lower interest rates. How do they lower interest rates? They enter the bond market, they buy bonds. If you own a bond and demand goes up, the value of the bond goes up. It's like someone's going to buy, I don't know, I can't think of it, this pen. And they'll pay any amount of money for this pen. But they're not going to do it till tomorrow. Well, why don't you buy the pen today for $1, and then the person tomorrow will pay anything? It might be $2, it might be $10, but you know they're going to pay you more. So you're like, well, I'll just buy it today. Oh my God. And then tomorrow you're like, dude, do you want to buy this pen? They're like, I want to buy this pen. Oh my God, well, you should buy this pen for me, right? Okay? So let's do the work now that you didn't want to do 3 weeks ago. Okay? There's only a 27% chance they cut at the March meeting. Now, where do we get this data? Is it opinion? Did they do surveys? No. Contracts being negotiated bank to bank, smart money, right? They're pricing in. Again, it's not opinion. They're actually pricing in, and you can do the math. And based on that, 27.7% of the contracts, if you want to look at it that way, are pricing in a rate cut in March. 72.3 don't believe it. They're like, no, the Fed's not going to do it in March. But that's factual. Now, let's go to the April meeting. Now, April meeting, I said there's one in March and one in June. I have old school thoughts about which meetings are live and which are not live. Now, all these things have changed, but let's take a look at what's being negotiated. Okay, different chart now. Oh, there's a 50% chance that they cut in April, plus a 13% chance that they cut not just one, but two, which means these guys are still in the game. So these guys are saying they're going to cut in March, and then they're going to cut again in April, is what they're saying. Okay, so right now we're at 1.5, 50% chance in April we cut to 1.25, and 13% by April it's all the way down to 1%. So aggressively cutting, moderately cutting, but combine them together, right? Over 60% chance that there will be a cut. Boom! So, is that enough to entice you? Right now, there's about a 60% chance between now and April the Fed jumps into the market and starts aggressively buying bonds. How can you make money with this knowledge? You buy the bonds today. Okay? By the way, this number is radically different than it was 3 weeks ago. I asked you to do this 3 weeks ago, and you probably would have made money, almost certainly would have made money if you had just acted on this knowledge. But this is how money is made. It's actually how money is created. The government, the institution of the Federal Reserve Bank in the United States is trying to push cash into the real economy, and all you have to do is be there and catch it. How many people here want to be there when the free money drops out of the helicopter? And do you want to just randomly be there and try to stuff it into your jacket? Or do you want buckets? Do you want canoes? Do you want a dump truck underneath? Like, what's your plan? Okay, let's go further. Is the June meeting live? June. Oh. Okay. 30% chance by the June meeting we're at 1%. Plus this one, that we're at least to $1.25. Right? There's an 80% chance, 79.1% chance that by June will be at least to 125, but maybe even one. Somewhere between 1 and 2 cuts between now and June. How does the Fed cut interest rates by 25 or 50 basis points? They buy bonds. They buy more bonds. They buy more and more and more bonds. They buy more and more and more bonds. They buy and buy and buy and buy and buy. Wouldn't you like to sell the Fed some bonds if you bought them cheap today? Well, this is why the dollar moves. This is why you hear things like the 10-year T-note moving, the 30-year moving, the 2s, the 5s. This is all this money moving around. This is how the bond market, well, treasury market, I should be more specific. This is how the treasury market works, ladies and germs. Okay? The bond market is way, 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 way bigger than the stock market. The bond market is done through math. The stock market, everybody's a liar because everyone's incentivized to be a liar. Okay? If you're CEO and you have $100 million in stock options, there's no way you're coming out telling everyone your executive board is a bunch of idiots and that your customers hate your new product and so on and so forth. Okay? Repos are something very, very specific. Okay. So anyways, here's this challenge. This is a role reversal. Now, this is a bit scary because it's a lower low, but if you're a bull, guys, this is of interest to you. Okay? You don't want it to go any lower than that. And of course, if you're a bear on this one, you'll have it set up differently. You'll have it set up like this. And it wasn't a perfect day for you, but a lower low sets up a good trade for you tomorrow. Okay. Let us move to, I guess we'll just start in the top left corner. So here's my Kiwi Swiss franc. By the way, has anyone learned about letting your winners run? This trade is currently up 400 pips, a little more than 400 pips. And this trade is up 333. So I have 750 pips basically because my entry's here and here. These are stops. Let's put this in perspective. I think I made almost 200 pips last night on this one pair while I was sleeping. For some people, that's a heck of a good week. My money made more money for me last night, and I didn't do a damn thing. Smoking my ultra aged cigar, sitting by a fire, staring at the lake, making money, doing nothing. Love it! That's your money working for you. I want your winners to run. I want you to remember universal truths. Okay? You know that you have to let your winners run. It's a universal truth. Okay? You cannot be successful until you let your winners run. It's simply math. Prince Philip, I never said anything about selling USD. But if foreigners are buying bonds, they need to buy dollars. So generally, when the Fed cuts, the dollar gets strong. Or you actually buy the 10-year T-note. That's right. An object motion tends to stay in motion. An object at rest tends to stay at rest. That's Newton's second law, I think. Yeah. By the way, if you were able to speak to Newton today, he would say like the whole, his idea of gravity and stuff. He's like he would be surprised that that's the thing that history grabbed onto. He also invented calculus. He also was a writer. He also was a politician. There's so much more than physics, right? So he's known for physics, but it was one of these things where he'd be surprised, like, really? That's the thing you latched onto? Really? Gravity. The apple falls, and you can measure how fast it falls. Like, it wasn't even him. Like, if you go back, you're like, people were working on that. Like, Galileo was working on that. Like, come on. He's like, it's just math. And so I had to, right? And then calculus has a lot to do with motion, right? So he had to figure all that out. So he invented calculus only so that he could prove the gravity thing. But he's like, yeah, but that's obvious. And then he's like, the real challenges are humans, right? So he spent a lot of time in the arts, a lot of time in politics. He was a philanthropist, you know, all this kind of stuff. He's like, really, this gravity thing? He actually didn't. Someone else came along like 15 years later and said, I invented this thing called calculus. And he's like, oh, no, I did that 15 years ago. And he went back to show, like, here's all my notes. I invented calculus 15 years ago. I didn't think it was important or relevant. I was working on more interesting things, like inventing calculus was something he did in his part-time because there was no Dancing with the Stars yet. Right? So anyways, yeah, an object in motion tends to stay in motion. So yeah. Another way I like to look at it is if you sell here, your target's down here. That's the other way of doing it. The thing is, my trades were last month. So I've been letting my trades run for 2 months. Okay. So anyways, I'm trying to show you guys proper trading habits, proper ways of thinking about the market. I'm trying to remove the video game aspect of trading, right? This is Forex, not Fortnite. And so better ways to think about the market, better ways to interpret data, ways to look at things like how to analyze market conditions, how to enter trades at proper prices, how to let your winners run. Now, granted, I'm not saying you should buy this or sell this right now so you can make 22 pips. It'd be irrelevant. If I sat here saying, if you sold this right now, you'd make 22 pips, it doesn't matter. You'd be broke in 3 weeks anyways. That's not how to trade properly. Okay? I'm trying to show you the way that money and markets are created so that you can be an active participant in that market. And money will be generated because that's the intent of that market. Okay, guys? Much bigger than how to scalp the news. Is everybody okay with that? Yeah, J2 Smooth. That's a good idea, actually. Still not great conditions even for a bear as far as, easy day trades and stuff. It goes a little too high and then it moves, so it might just be a time frame thing. The other way you could look at this, I think it's dangerous to have a big spike and then suddenly you walk in and you're a bear, but we can look at it this way. And it's still a terrible place for a bear to just start. It got overextended and all that kind of stuff. So using analysis, you should look at a lot of this and say, cautious. Even though these moves are big, you don't need big moves. You need trends. Think about this over the course of a year, guys. You don't need a situation where for, let's say, a week, there's big volatility. And we've seen markets like the yens go down hundreds of pips, up hundreds of pips, and down hundreds of pips over the course of 2 or 3 weeks. Yes, you could have made a fortune in that time, but also, similarly, you could have lost a fortune in that time frame. It's not what you want. Over the course of 52 weeks, you want steady, slow, but predictable trends so that you enter low risk, low volatility type trades and you hit very predictable targets. The crazy markets, or let's say the volatile markets or the unusual markets, are not what is going to put your kids through college. It might be exciting. Maybe that's where you believe your yellow Lamborghini will come from. But more often than not, you'll lose money in that situation because there's more unpredictability, and we're trying to look for predictability, right? So it's let's say a year from now, we won't even remember today. We won't even remember this week. It's like it doesn't even exist. And that was helpful for me once I realized that earlier in my trading career, that today doesn't actually exist. This week doesn't even actually exist. It only exists if it's memorable, if it's noticeable. So if you lost a lot of money this week, it's noticeable and therefore it exists, but in a bad way. If it's noticeable or memorable a year from now, you're like, oh man, remember the 26th of February? I made so much money that day. Well, here's the thing, right? Reward is a function of risk. So if you made a noticeable, memorable amount of money today or this week, it's because you took on too much risk. It's the only way to make that kind of reward. And this removed a lot of stress from my trading once I realized this, because I had a 3-year pro forma cash flow statement, and every day I hit modest goals. And I realized these modest, boring goals added up over the week, over the month, over the quarter, over the year, over the second year, over the third year. And I realized if I just had a multitude of boring, unmemorable days and boring, unmemorable weeks and boring, unmemorable quarters, at the end of 2 or 3 years, I easily hit my ginormous life-changing goals. I didn't need the gamble. I didn't need the big wins. I didn't need the home runs. I just needed to get on base. And that was really cool. So no day should be memorable. It's just what at the end of the year you have your profit target. So it says it should be as boring as like you punch a clock at a factory, you sit down on a chair, and a conveyor belt of cans full of beans are just pushing cans, millions and billions of cans of beans, and your job is to pick up one can, put the label on it, and put it on a different conveyor belt with cans with labels. So you have the conveyor belt over here with cans with no labels, and over here, the conveyor belt cans with labels. And you go, take that one off, no label, put the label on, boom. Okay. Entered some, right? Grabbed this, a very simple euro-yen trade, sold it at resistance in a downtrend. Okay, boom, move the stop to break even. Grab here, oh, what's this? Oh, Aussie yen, yeah, it's in a downtrend. Sell it at resistance, right? Great, go over there, grab that. And every day, it's just boring. What did you do today? Well, it was a downtrend, so I sold it at resistance, and then I moved my stop to break even, and then I did this, and oh well, sold the Kiwi Swissy for the 19th day in a row. Put that down there, right? Boring, simple, boring, risk-free, stress-free. At the end of the year, you'll do very significantly well. Coolio. Down, down, down. Bitcoin 9K. Very cool. What do you think you should do here? What do you think about that? By the way, could I be so bold as to ask you to please click the like button? Would you please click the like button? I'd appreciate that. Reckless says continuing to 8,000. Well, on this type of chart, you don't have a target. There's nothing predictive here. You would have to use a different tool like a pivot point to come up with a target. Okay? That's why having predictive indicators is important. All this says is, okay, bottom, up, 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 down, down, buy in the ribbon, up, 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 down, down, buy in the ribbon, up, 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 down, down, buy in the ribbon, up, 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 down, down, buy in the ribbon, up, 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 down, down, buy in the ribbon. But notice no higher high, so I drew this for you guys, right? And now we're trending, and I had it trending down for you. So this is most likely, okay? But what's the target? I don't know. This doesn't tell me a target. Okay. Okay. Now, if you want a target, I suggest you use a combination of weekly and monthly pivot points. Okay. All right, WTI. At that time, it seemed like we were going to have a bullish recovery. We did a central pivot to an R2. Textbook trade, by the way. So at that time, the question was, if you're still a bull, okay, this is your buy right here, and you don't want to buy it any lower than 52. Thank God, right? Because it dropped low really fast, and we already knew that if price was below 52, we're not interested. Why is it below 52? Market conditions have changed. Cool. So, and in fact, look at that lower low. Very interesting. So we just hit 49, which I think is actually kind of interesting. This could get really bad. Who's this going to be bad for? CAD? Not Aussie, no. I mean, out of correlation probably, but no, that's not the right answer. CAD I accept for sure. And Noki, thank you. Okay, let's do Noki. I think I might even have it under the energy. Where do I have it? Nat gas, WTI, Brent. Okay, that makes sense. We can add a couple others here. No, I want to do. I want to do. Did I miss it? Oh, here we go. Here's one. And let's add CAD, I guess, against the US dollar, because it's going to be about the same. Oops. It's probably USD CAD right there. All right, cool. Now, I don't like these templates, so I'm going to go template. Let's go Confluence. Let's go template. Let's go Confluence. And then let us do this. Ciao. It's not perfect, but it's something. And Noki. This is Norwegian krona, and it's if this pair is going up, that's because it's weak versus the dollar. Okay? Amazing, right? January, February. Look at this, huh? And it's OOP. Anyways, wow. So that's bad for Norway. Norway is a major exporter of Brent. Okay. Let's go over the book I wrote. Strategic and Tactical Forex Trading. It says in here you should become a buyer and stay long until it crosses down. Well, it's still extremely bullish. Huh, that's cool. At this point, the market technically becomes bullish. Okay? Of course, there's a little 1, 2, 3 reversal pattern here, which is the most obvious reversal pattern in the world. I love it. This is the one I said if you had to practice one reversal pattern, it'd be that one. And if you just did this over and over and over and over and over again, that would be enough. I hope you remember these things. Okay? Okay? Up, 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 down, down, up, 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 down, down, up, up, right? So it's just moving along. Now, these pivot points give you targets. So they're helpful. So I could say this is going to hit up to 9.5. Okay? And then get challenged around 9.5. Cool. But with the other setup, we don't really have that, but the trend is maybe more obvious for some people. Okay? So I was showing you the 2155 cross. You could do this as well and just say, oh, I guess we're bulls now. Okay? Up, 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 down, down, by the ribbon. 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 Up, up, up. And you're going to keep doing this forever and ever and ever and ever. Yeah, you'll go through a bad period right in here, but you went through a good period in here. So, right? Maybe get cautious if you keep selling and it keeps going up. Maybe you should, right? Learn to be cautious at some point. In this situation, right, it never made a lower low, so you shouldn't be panicking. Here, okay, lower high, lower low, lower high, lower low, lower high, lower low, lower high, higher low, higher high, higher low. Like somewhere in here, you should be on the clue train to at least throttle back your aggressiveness on selling. Okay? And by the way, here's the first day of the year of 2020. Clearly an inflection point, right? Matters. Okay? Do you guys remember me telling you that I was going to flip on the ends starting the first day of 2020? These things matter. Why they matter doesn't matter. It just matters that they matter. Cool. Now what? This is our kitty cat versus the buck. Okay. Not as clean, but down, 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 down. So when this goes up, oil prices tend to be falling. Not as clean, but it's happening. When you use relative strength exercise, why do you use this? I don't think you're understanding. When you do a relative strength exercise, Forex student, you pick whatever currency pair you're analyzing. Because you're trying to find out, is the dollar strong? Or is the Norwegian krona strong? Okay? So if you're trying to determine market conditions for trading Norway, because you want is it the crown or the krona? Or kroner. I always get them mixed up. I think it's kroner, isn't it? If you're interested in trading kroner, you're not sure. Like, I hope you already know if you're a bull or a bear on that. So right now it's extremely bearish. So let's say for the last 8 weeks you've been a bear. Cool. So what you're doing now, before you enter today's trades, you're like, is Norway kroner weak? Because you want to sell it. And if so, which currency in the world right now is the strongest? Because you want to sell Norway. Cool. You want to dump it. So now you need to figure out today in market conditions right now and in recent market conditions over the last couple of hours, which currency in the world is strongest? So that you might find Great British Pound for some reason right now is unbelievably ripper strong. Then you pair this up. This is why I say when you're trading cross pairs, it's a relative strength trade. It's not a fundamental trade. This one has to be weak maybe for fundamental reasons, but you're just choosing this one today because of it's strong, and that's it. You don't care about anything else. The crown. Okay, thank you, Mehdi. Okay. I mean, crown, kroner, it's all crowns, right? But anyways. So that's what relative strength is all about. Okay. It's actually not even a decent month. That's not a good setup at all. So it's actually pretty interesting. Yeah, crazy trades. Beautiful breach though, huh? That's why I use these things. It matters when you breach. You should at least recognize the breach. Okay. Here's another one. So this is, now that we're at this 49 level, be interesting to see what happens next. Very interesting. So as you know, like I boil down my trading to risk on, risk off. It's a macro play. It's not the only way to trade fundamentally. Another form of trend trading, and by the way, I recommend this in my book, right? So if you read this 10 or 12 years ago, you got to start remembering these things, okay? I say that you should pick one currency, okay? One currency. And become an expert because the world pays money to experts. Jack of all trades, the guy that does electricity and does plumbing and he does, whatever. He does a little of everything. He doesn't make much money. When you're an expert in something, you make a ton of money. So I want you to increase your value. I want you to become an expert. I want you to be an expert. That's a risk off play, Roger. That's just standard cash flow and risk off. Okay, so now we're not talking risk on, risk off. That's what I do. It's not the only thing I do, but that's how I generally start my thought process with that. But let's switch this around. I want you to become an expert in one currency. For example, you can be an expert in the Aussie dollar. That's it. The only pairs you look at, any of the pairs you look at, have an Aussie in it. Okay? Aussie yen, Aussie Swissy, Aussie dollar, Aussie CAD, Aussie Kiwi, Aussie, 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 oi, oi, oi. And you read Australian news, you read Australian trade data, you pay attention to the RBA. But over a course of time, and it probably will take less than 10,000 hours, probably only 1,000 hours from now, you will be an expert in the Aussie dollar. Now, you might not be an expert in CAD, you might not be an expert in USD, you might not be an expert in yen. You'll have some idea of what is happening in those currencies because you're trading them against your beloved Aussie dollar. But you are the world's foremost expert about Aussie dollar. You can write books, you can write magazine articles, you can speak at conferences, you can go on TV. Aussie, Aussie, Aussie. And whenever CNBC needs to talk about the Australian dollar, they call you. Okay? That's a specialization. That's an expertise. By the way, if you did that, you will be successful. Right? Because if you build a global reputation, suddenly you're on Bloomberg and CNBC all the time. Whenever they want to talk about the Australian dollar, for some reason you're always on TV. Now, or over the course of time, people that are, or in institutions that are exposed to Aussie dollar will say, we need someone to help us protect our Aussie dollar exposure. And they'll say, well, who's the world's foremost expert? Wayne McDonald. Give him a call. We need him. Done. Money just rains out of the sky. Okay? Great. So let's go back to this. You do your analysis, and we boil it down to even something simpler. Not only do you trade the Aussie dollar, you're a bull or a bear. You say, I look at the balance of trade data, and it sucks. And the Chinese economy being shut down, for Australian exports, sucks. Because now industry in China will need less iron ore, less coal, all that kind of stuff, right? Less energy needed in China because the factories are shut down means they need less coal. And why, China has lots and lots of coal, lots of domestic coal. It just happens to be dirty coal. So wherever China needs clean coal, like let's say factories near or electrical power plants near major cities, maybe, I don't know the government's policy, but maybe they say only use clean coal in these ones and use dirty coal in the other ones. Well, anyways, the world's best clean coal comes from Australia. Plus, if you're trying to make steel because you're building new factories or new skyscrapers or new train, all that kind of stuff, you need steel. You take iron ore, coal, mix them together. Well, those are the two major exports of Australia. So I can say, well, based on balance of trade, I think that sucks for Australia. And then looking at Australia's largest customer, now that they're economically hurting and there's an economic slowdown, that also sucks for Australia. So I'm a bear. Now you could take the opposite and say, well, you know, we're getting to the end of this. The worst is over. It's not spreading as fast in China. This seems to be contained. Great. Well, then do the opposite. Whatever. Just make a decision. You're right. You're an expert in the Aussie, and your expertise has told you you should be buying Aussie dollar or you should be selling Aussie dollar. That's that. If you can get to that point, then every single day when you get to your charts, you do a relative strength exercise. So let's say I'm a bear on Aussie dollar. Is this a good opportunity to sell? No, done. I'm done for the entire day. Is this a good opportunity to sell or to buy? No, done for the entire day. What about this? So I want to be a buyer here. Is this a good opportunity to buy? Actually, maybe. Maybe. We'll see. I'll take a look at that later. Aussie, I'm a bull or a bear? I'm a bear. Is that a good opportunity to sell? Yeah, maybe. Okay. I keep forgetting what my bias is. All right. I'm a bear on Aussie dollar, right? This has been down all day. Is this a good opportunity to sell now? No, well, I have to sell the rally. So what are my choices? Well, I could sell off the 4-hour 21. Next week, I'm going to sell somewhere between 66.35 and 66.72. Right? So my first sell opportunity is here, maybe later today. I got this over here, which is next week. Cool. And now I get really, really good at that. Also, I could take a look and say, okay, which one is strongest? So I want to sell Aussie, so I'm looking for strength. So yen is strong, dollar is strong, pound is... so you got to make sure you're on the right time frames. Yeah, they're all different time frames. Sorry about that. Trying to do this quickly. Make sure you got the similar amount of candles. Give this an extra click. Okay, Aussie week, Aussie week, Aussie week, and Aussie's kind of neutral. All right, so I do want to stay away from this one. Okay, so but if I want to, right, where would I want to buy pound Aussie? I can't buy it there because I know this is where people get out. But I could buy it down here, right? Couldn't I? Or at least consider it. I want to sell this. Do I sell on a monthly M2? No. Do I sell at a weekly S2? No. So I want to sell, I just can't sell here. Okay? So now I'm taking it to the next level. Why do I see all these things, by the way? I'm falling in a trap where I'm trying to figure out what I want to do now. Do you understand that trap? I want to sell Aussie yen, but I can't do that now. I can't do that here. I want to buy pound Aussie, but I can't do that now. I can't do that here. Well, I'm thinking now. I'm supposed to be asking, what am I going to do tomorrow? Javier, take the fundamentals course. Javier, join the performance coaching. There are resources. Go to fxbootcamp.com. Go to swing.fxbootcamp.com, although that won't really give you that. Go to live.fxbootcamp.com. There are resources. Okay? You insert a credit card, and knowledge will come up. Okay? I would suggest if you've already done FX Bootcamp videos, you move away from the video courses because now you got knowledge, right? Now you need experience. So if you're stuck with being very knowledgeable but mediocre at trading, I highly suggest you go to live.fxbootcamp.com and work with a performance coach that will work with you specifically and will drill on you until you have this information. Not just information in your brain, but executable experience that you can take this, do that, make a decision, and then show up at the right time and do the right thing instead of just watching. Doing, right? You need a performance coach. It's like a golfer working with a golf coach that says, hit a ball. Oh, your wrist moved. Hit another one. Okay, better on the wrist. Do another one. Whoa, a little off balance. Slow it down. Do another one. Do it again. Do it again. Anyone in the live.fx bootcamp program, live.fxbootcamp.com, they're used to this, like do it again, do it again, do it again, do it again, show me again, show me again. Where's the reversal? Where's the resistance? What time did you pull the trigger? Right? Right? Where's the trend? Why are you selling? Why now? Why not in 3 minutes? Why not 8 minutes from now? Do it again. Show me again. Do it again. Do it again. That's what live.fxbootcamps.com is all about. A real performance coach that will force you to do the work you're supposed to be doing to build real skills. And I mean executable in the moment as the candles are forming type, execution. But what you'll find out is the vast majority of people don't do it because they can't do the work. They're unwilling to do the work. And that's the real eye-opener. That's the real eye-opener. It's not the knowledge, it's the work ethic. Being at the right place, at the right time, ready to go, mentally, psychologically, emotionally, fundamentally, technically, all that kind of stuff. Showing up at the right time with the right mindset, ready to go, all planned out, ready to pull the trigger and actually do it. And what most people fail to do is show up and do it. And then what happens is they show up at the wrong time with the wrong attitude. They're like, oh, I wanted to do it, but I missed it. So now I'll do it, and I'll do it late. And dude, no. And then it all falls apart. Right? Like, oh, I wanted to buy euro yen, and now euro yen is up, and I just couldn't do it at that time, but now I will do it. And then, of course, you get destroyed. Right? So please consider these resources that have already been created for you if you need to get to that next step. Okay? Well, the order is do every single training course at fxbootcamp.com. Get the knowledge. If you don't have the knowledge, then, right? Right? You have to understand the game first. It's like you have to understand how to walk and talk and read and write, right? All that kind of stuff. Once you've gone all through that, and right, then yes, if you need a personal touch, there's like the swing trading group, but that's not me holding your hand, forcing you to do stuff. It's me going through my analysis and sharing that with you so we can plan our trades 2, 3, 4, 5 days in advance. Sometimes I go through your charts and you show me what you're doing and I give you general feedback in front of everyone. Okay, that's fine. That's nice. It's not really hand holding. It's more like sharing and caring. And really a lot of part of the swing trading group is that it forces you to do the work that you're supposed to be doing, meaning like we all get together and analyze the charts on Thursday so we're ready to sell on Friday or Monday. A lot of people just kind of life gets in the way. It's sort of like going to the gym. Lots of people want to lose weight. Lots of people want to be healthier. Lots of people pay money to go to the gym. And after about 3 weeks of going to the gym, they stop going to the gym. But if you hired someone for $100 a month to meet you every Thursday for an hour at the gym, you're like, well, I don't really want to go today. It's a nice day outside, or I got a lot of work, or my kid's sick today. I really don't want to go to the gym, but it's Thursday and I paid that guy $100. Like, oh my God, I'll go. I'll just go. Why? Because you paid the guy the $100. You got your coach. He's sitting there waiting for you. You're like, I don't want to do it, but I'll do it. That to me is probably the biggest part of the swing trading group. That you just have to be there and do it, right? Right? The live group is different. That is the truest boot camp there is. That is do the work, do the work, do the work, do the work. You will get really, really good, or you will quit or die trying. Okay? Right. So what I wanted to look at today is not even on here actually. I don't like trading this, so I'm going to get rid of this and I'm going to change this up. You know the new. And if you know me for a while, you'll know that I don't like trading Aussie versus Kiwi. And you'll know why, so I don't need to cover it. All right. What I do like is this. Okay. Is this tradable? Well, first of all, what are market conditions? I'd call that bearish, right? Been bearish for 2 years. Cool. So every day I can be a bear, right? Okay. So for the last 555 days, I can log in and say, should I sell today? Yes or no? That's it. That's how you trade. I know what I'm going to do before I do it. I just don't know if I'm going to get the price or the market conditions. Sellable, 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 red flag. Okay, drop. Sellable, red flag, sellable, 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 red flag, red flag, red flag, right? So, for 4 days I didn't have an opportunity, right? So on and so forth. So you don't get your market conditions and then you do get your market conditions. Okay. So imagine over the last 2 years, this is not even 2 years, this is just since May last year. So this is almost 1 year. Imagine all you did was sell, 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 stop, 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 sell, 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 stop, 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 stop. Oh, 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 oh. Higher time frame roll reversal. Oops, is this going to drop? Okay. You can see there are large, long periods of no opportunity. Maybe the trade data around the world has changed and all that kind of stuff. But there are long opportunities that you do make money. Weeks and weeks and weeks and weeks, you crush it. Then a week or two of mediocrity, and then weeks and weeks and weeks of just crushing it. Amazing, right? Yeah, maybe today. I haven't decided. Right now, everyone in the swing trading group has it, so maybe I'll wait for their feedback and see if I need to make any adjustments. Is anybody using it right now? My bias pivots? You guys are? Cool. Cool. Right on, guys. So gold coming down. Dollar recovering. Pound yen. See, I got to measure this. This is important. Okay? This is very important. Failure to make a lower low is very important, technically speaking. Okay? So it might do this. Probably will do this. See, I always think sideways until it breaks. I never plan on the break. Okay? Like, for example, a bull would have been looking for this if they had bought, for whatever reason, if they bought. No bull said, you know what, I think it's going to go up sideways for a while, then down, and then go off. Now, it may be a double bottom, but you wouldn't have traded it that way. Okay. If it does this, you need to be ready, willing, and able, if you're a bull, to go along. Okay. But that's not a great textbook setup. Okay. So I almost treat it like neutral. Oops. What did I do here? If anything, this sets my trade up for tomorrow if I'm buying dollars, because this is a breach of the buy zone. Now we're in a buy zone. I don't know if you can see this with your mind's eye, but this is a buy zone if you're a bull. So as a bear, if it kind of breaches this, if we kind of go, this was the first part of the buy zone, and then it does this, and then a hard drop. So the second part of the buy zone is probably in here. So now if it does this in the next 12 hours, that gives permission for bears to sell hard. But not today, tomorrow. That's what I'm saying. So when I look at this, I'm like, oh, this is interesting. This might set me up for tomorrow. Okay. Here's a nice psychological level, 109. Very nice. Yeah, well, I can see the risk on scenario, right? Most of this is risk on. You can see it here, you can see it here, you can see it here, and you can see it here. So that makes sense, right, Stephen? So you would translate that to CAD Swissy up, for sure. Okay. So we've gone almost 2 hours. I think we'll pull the plug. There's 174 people and only 111 likes, so there's about 60 people. Could I please ask you to click the like button if you have not yet done it? I really would appreciate that. I gave you almost 2 hours of my life. We covered gold, oil, Bitcoin, Aussie, Swiss franc. We did risk management, relative strength again. We talked about Fed fund futures rate. We talked about the inverse relationship between bond yields and bond prices. And we talked about the open market operations at the Fed. Peter DeVries have... yeah, I don't know what you're doing there, Peter. Obviously, you're doing it wrong. Here's how you do a limit order. Let's say I want to sell at 143.50, okay? So I do this. I go boom. And then I adjust it. And I got it. Or you can modify it and get it exactly to 50. Okay? That's how I do it. All right? Yeah, you have to comment after the webinar, but it's available in like 45 seconds. In fact, if you just wait here, I'll wrap up the live stream and then I'll post here the link to the video so that you can leave a comment on the video and document, okay? By the way, let me cancel this. So can you please wait 30 seconds? If you can wait 30 seconds, I will get you the link to today's recording and you can document what you want to document there. Okay? Cool. So, thank you for being on my team. Thank you for being in my life. I'm trying to go to full webcam here. There we go. Thank you for everything that you do. I appreciate you. Let me just reaffirm that the hard work that you're putting into learning how to trade Forex, it's right. It's worth it. Beyond your wildest dreams. So stick with it. You can do